Alrighty. With the news coming out in 2 minutes, not even, it's down to a minute now. Figured we'd get it rolling along. Let's get the chat line going. And we're going to see what's happening. Good morning, good afternoon, and good evening. It's Doc from North America, behind enemy lines. And it is 8:29 a.m. in the morning, of course, on the East Coast. And we are looking at Tokyo at 10:29 p.m. in the evening. So that's how our markets look like across the planet and in between and around. And you can see there the chart. Let's make sure we can hear the sound too. And there's Robin. Hi, traders. I like that. Yep, I like that. And the news has been coming out, and it should be hitting. You know what? Let's throw the stock market up there real quick instead. So there's the S&P 500. It has come out. It's out already, the unemployment number. And you can see it. The first initial pop from it was up to the 107 area again. And now we are trading just a little underneath 4,100. You can see there the S&P jumping around. It's be jumping. It be jumping. Let's take a look at the bonds, see what the bonds are doing from it. More than likely, the bonds in the end result is going to be them trying to... okay, so it's still pressing down. We are pressing down a little bit more. We've broken the 131 area on the 30-year bond. It's been down all morning, so they were anticipating that. The Vigilantes doing their thing. We're down to 4,094 now on the stock market, so you can see that pressure there. Let's look at the dollar index and see what the dollar index is doing. Right there. There we are. $253,000. I think they were betting on, and I like to use the word betting, 180. So they were looking for 180,000 jobs, and they got 253,000 jobs. It's like quantum mechanics. It's kind of like the statistical thing. None of it is. It's a lagging, all kinds of combined bunch of messed numbers. Unemployment rate is down to 3.4. I think that's a drop from 3.5. So April labor force participation was 62.6%. And let's see. Yeah, so they're saying their employment isn't growing a little bit here. Nothing major. It's the same old. These numbers are kind of sticky to begin with. As far as I'm concerned, they're not, ever since Mr. Obama's Bureau of Labor Statistics changed the numbers around, it is kind of wonky. It's the best way to describe it, is wonky. Now let's go take a look at the stock market. And the stock market is coming off of that low there and trying to lift up. At the same time, the dollar index is flat, down teeny-weeny little bit. It's gone on a third day on a down. You can see we've been orbiting on the weekly sell now since mid-March here. Since back in this area here, we've been in the weekly sell, and it's been slowly drifting south, and that's the index itself, which means that the dollar is going down and the pairs trades are going up. George of the jungle. Good morning, George. It's an action-packed TGIF. Thank goodness it's Friday, and we're looking forward to riding into the sunset. How are you doing? So far, it doesn't look like the numbers mean a lot. Let's put it this way: they didn't explode the market. The market has not sold off. It's just a little bit weaker than what it was before. That's about it. Strong. It's up for the day, but off the highs. I guess that's a good way of describing it. So let's see. What else can we say about any of these employment numbers? Just a non-farm payroll thing that drives the market crazy for a little bit. Nothing major. And what is it saying here? Hospitality and leisure gained 31,000 jobs. Woohoo. It's just kind of hanging. Just kind of hanging. The markets overall are in this big, giant consolidation, really. There's no real bottom, no real top at the moment. It's just kind of a channel. And same thing with the currencies. They're finally, when you look at them year over year, they're really not doing too much at this point before the noise exploded last year of inflation. Inflation really had a hard push onto the marketplace. It really did. It messed with the pairs. It interrupted the free money flow. It really messed things up when it comes to trying to gauge the market on a fundamental way. And so it's become a somewhat of a great hindrance. It took over a year before the Biden administration, was it like a year and a quarter in March of 222. Was it 220? Yeah, 222. Took power in January of 221. It took a year and a quarter before they even realized that they had inflation, and everybody else was screaming in the summer of 21. 6 months in, you're exploding in inflation, but for some reason they just didn't recognize it or didn't really care. It's so hard to say anymore on how try to guess what they think and how they act. Because of the way they act. That's all. It's just very distorted at this point. All right. From there, what else can we say? You can see here on J4X. Let's do this. Get rid of that. There we are. And you see J4X here. This is the dollar index, and it's been just slowly drifting down. And, but again, it's been trapped in this area for, from the first quarter of 22 this is the first quarter of 21. That's the second quarter. That's May. No, wait a minute. Let's make it the whole screen so we can get a better flavor for it. Okay, so yeah, there's the low there in 2021. The dollar was hanging in this area. The inflation exploded it up, and now it's falling back. Because it's really complicated for these central banks and the Federal Reserve to deal with interest rates and inflation at the same time. In other words, they can't walk and chew gum. That's what it means, basically. They can't walk and chew gum because they're not seeing. When they walk and chew gum, they're obviously blind at the same time. They can't see. That seems to be the facts, the way we see them. They seem to be lost all the time. So, all right, now let's go over to the euro. Let's go to the euro pair of the dollar-euro pair right there. There you go. And as you can see there, it's kind of trapped in whatever that index is that someone put on there. I share this with Janos. So that is that. And then at the same time, we look at it over here. And there. Is that right? Where's it at? Yeah, there it is. Come on, click on that. There we go. And so you can see here, the euro against the dollar is backing off a little bit after being in a buy for 2 days, and it's not been the best either. Look at that. When you really widen this out, you see, we go into the buy. We're in a weekly buy since down here in the 107 area. It gets up to 110. Bangs up against it a couple times in these areas there and there and there and there and there. That was 5 different times. And then we go into the buy, and it's a loser. We're losing. Our math says to be long, and we're wrong. And so now you can see it's flirting with the sell again. It's flirting with that sell again. It tries to make a new high. The next day, there's the close. It gains, and then it fails. So, if you're trading the hard delta, or what I call the pairs trade, the hard delta, then what happens is that you would have a stop in there, or you've taken your profit. It's one or the other. And so it is kind of a win. But right now, overall, in the general trend, it's moving down. And our weekly is saying that it wants to go up. It's up higher, of course. It went to 110 from 107. But right now, it's having its issues. And you can see the second day of it now. They're not happy with this employment thing. They're not seeing proof of an interest rate drop or slash consolidation. In other words, do nothing. Now that's the attitude of it at the moment. Now I just looked over to the screen and see some real action going on. So let's go back to the stock market real quick. Okay, so what they've done is the sellers have cleaned that out. They didn't get what they wanted. They sold, and now what we are is heading for the highs of the day again, right there. And you can see our two indicators here for the intraday trading is telling you to be long, and like everything else, it never goes perfectly. But in the end, it wins. As long as you use the right vehicle. That's the key right there. Using the right vehicle. In other words, like a binary or an option spread, or marrying an option to the hard delta. When you do that, then you have the staying power and you don't get knocked out. Or you buy just so much hard delta that you can, like a Metho 2000. He's averaging into products and has a broad, long-term view to the point where, his next buy is like, a 20% lower, and that type of thing, and averaging in correctly. In other words, averaging in as it goes down, not averaging in as it goes up. Okay, so there's the stock market being happier again now. And then we'll put it over here. Let's put the cable up now. We'll go take a look at cable right there. British pound against the dollar. Showing strength there, and then we go and look at it right here. As you see here, it made a high, went into the buy yesterday, doing fine, and now that's the winner chicken dinner right there. And wait a second, what's going on? Yeah, that's right. Let's make that green like that, because it's in the buy, and then we'll put the sell in there. They're saying unemployment went down for a negative reason. Employee Bridge Chef Workforce Analysts. Okay, so April labor force, they're saying, okay, so they're saying, I want to hear this. March show 149 less jobs than reported. 149 in a country with 360 million people. I don't think 149 means much. Dive in deep, author says. They're talking about a leading indicator. They're saying many. They're saying there's concerns on the underlining, so that's why they're rallying the stock market. When they dive into it, I mean, I think someday they're going to have to clean this number up. It's really bad. I'm not talking about, I mean, they have to fix that thing. Mr. Obama made it, his Bureau of Labor Statistics made it like a static type of tool. In other words, no matter what's going on, it's down locked in the 3s and the 4s. And they're saying basically people are buying stocks right now and selling the bonds. Maybe I guess we've made a new high. Let's check that out. No, the high was 107.50, and here we are at 106.50, and the high was 107.25 on this particular bar. Let's see if it takes that out and jumps into the 10s. And so they're saying that the job numbers the headline number of the 253 is good, but when looking at the other hourly work and so forth like that, is not, and layoffs. So in other words, the way they changed the Bureau of Labor statistic for unemployment, they took out the overall broad. So in other words, I think they constantly subtracting down, so it reduces itself. Silver down. Let's check it out. Did we make a new high? We did not make a new high. Look at that. Stock market keeps on hitting that. Third time, usually, if it hits that again and then drops off a little bit and then starts to rally, the next time it jumps through, the buy stops will take that sucker into new highs. That's usually. Let's go look at silver though. But that keep an eye on that. That's what happens. Now there is silver, and as you can see here, silver went into the buy yesterday, pushing down a little bit today. They really seem to that 26 area seems to be a real ceiling. We saw that last year and the year before that. It has become a real ceiling, the 26, which is like 50% off its all-time highs. I don't understand why it does that, but it does do that, and it seems odd to me, George. Again, the central banks control the metal complex because of the incorporations of the funds. In other words, they have to, because if the metals go through the roof, they have to liquidate some of their stocks. Quantitative easing concept is stability, not to lose the stock market. In other words, it's supposed to save the stock market. Headline news, shallow information, that type of thing. Now let's take a look at, let's see, we saw the silver doing that. Let's see what gold's doing real quick, and then we'll go back to the currencies. Gold selling down, and look at that. Even pushing through the sell number today. Excuse me. So that pressure is on too. How about that? They're really pressing down on that. All right. Now, from there, let's go back to the currencies. And there is the cable. And like I said, you can see the cable's been strong throughout the morning and not giving it up like the way the euro was. And again, both of them are just making noise more than anything else. I don't see any real change or damage or anything like that going on, or more exuberance, where they're just so excited. I'm so excited. I'm excited. That type of thing. From there, you can see it on J4X too. It's that strength. Oh, now where's the green line today? What's up with that? It keeps on jumping around. Where'd my green line go? Let's change the product. Maybe it'll jump out. Let's go back to the euro. It was missing in there too. I thought I looked at it. Where? Let's go. Let's see. All right. Let's do it this way. Add recent history. Stochastics, SMA. I think it's that one. There we are. And then we need to merge them together. Let's see. I did this yesterday. Move to. No, that didn't do it. Let's see. Edit indicator. Maybe I have to do that first. No, not that. How do we get these two together again? Clone, copy, remove, average, move to, existence pane above. Well, that didn't work. Arrange. Oh. Whoa, I didn't realize I could do that. I don't like that. All right, we'll figure out how to move these up again. Remove indicator. No, I don't want to remove it. All right, we'll figure this out. Edit indicator? No. Hide? No. Clone? Copy? Clone? No. Somehow or another, I can't figure out how. I did this yesterday too, and moved it into arrange it. Bring to front, bring forward, bring send to back, send. I don't know. Let's see. Restore default? No. No. We want the slow in there. So we gotta fix that again now too. Let's see, we go like this. Edit. Indicator. I don't know. Me sad. I don't want to clone it. Hide it. Oh, no, it really wrecked it. Let's see. Restore range indicators. Restore indicator. No, I don't want default. Let's go back to this big button again. Recent indicators. There it is. There we go. Edit. Let's see. Edit indicator. Inputs. Outputs. Let's get rid of that. There we are. Okay. And now we need to change the color on that. Edit indicator. Inputs, outputs. Make that yellow. Okay, there it is there. Now, how do I get this down? Oh, we'll figure it out somewhere along the line. What is that? Show header. No, I don't want to show header. Edit indicator. No. I did it so easy yesterday. Why am I missing it today? It's like they upgraded the software or something on me. Arrange, move, existing pane below. So I guess I got to do this. Do that same thing there, and there it is. I know I could figure that out. I was just doing the wrong spot. There we are. And so when it's above, it's bullish. When it's below, it's bearish. That's the way it goes. Now we go like that. Wow, that was a chore. Sorry, traders, about that. And you see Doc keeps on fishing until he gets what he wants. All right, and then, so what are we looking at here? We're looking at, that's cable. Let's go over to the Swiss and see what the Swiss is up to this morning. Oh, before we do that, let's do this. I just want to see. Oh, there we go. There was my point, traders. The third time's a charm. And the stops jumped through it, and it made a new high for the day, which was 13. Traded up to 111.13. I've got some gamma. Let me just see how my position's doing. Climb, gamma, climb. Climb, gamma, climb. I got gamma. We have gamma. All right. And so, notice we have delta on the upside. All right. And then what do we got going on from here? Let's go over to the Swiss franc. Let's put that in there. Mr. and Mrs. Swiss. Trading at 89.52. And we'll put it up on Chicano Core. That's what we used to call it when I worked for the Chicago Corp, which is owned by, I can't think of the name of it, Harris Bank now. Let's see. And there it is there, the Swiss. Woo! What a punch in the face that is, huh? Well, it's in a sell, so you can't worry about the long, and it was a winner chicken dinner from there, but unfortunately it is getting smackadoodled right there. Real battles going on here in the trading wars. Doc's Math is having a fight today, that's for sure. I'm sure there's a winner chicken dinner out there that makes up for it. Crude oil finally having an up day. Yeah, well, it went down to the 63s, George. Can you imagine? I was happy to see that. Did you hear me mention yesterday that they had, or I guess it was a couple days ago, that Saudi Arabia's budget, the government budget for the year, if oil is below $80.90, not $81, not $80.80, but $80.90, they have a deficit. So they need the oil to stay up into the 80s. That's why they do things to push it back up again. And since you mentioned it, let's go take a peek at it. I saw Brent up too. I saw Brent around 77. And there is the spot. We're trading. No, I saw Brent at 75, 76, something like that. 70.42. You can see right there we're over the 70 mark. We got down to yesterday. We got down to 63.64. And and then it bounced out of that. We've been in the daily sell since back in here in the high 70s. So we've been in the weekly sell, same place. It doesn't look like it's going to really change much, but there's no doubt that they needed to do something. Yeah, can you imagine? $80.90 makes them flat on their budget for the year, and then if it's trading like right now, they have a deficit of, I guess, 12%. It's $70.40 versus $80.90 is what is that? That's 12%, isn't it? So that's their budget deficit all of a sudden drops for this month into the 12s, down 12%, and I guess you needed to smooth out by having it run up to say 90 or something like that. All right, and so there's the Earl. Now we'll jump back to the currencies again and check out yen. There's the Yenski, cousin of Japan, the Eastern European Yenski. And you can see there, it's trying to pop up. We've been in a sell for a couple of days here, and now it's popping up. I mean, what's happening here is it seems like they're acting like the dollar is going to, interest rates are going, well, they are. We've seen that. Let's just zip over there again real quick. But right now, the bond is moving, interest rates are rising a little bit. Nothing major, just a little rise. Now that we're down to 130.18. We started the morning off at 131.25. The high was 131.30, and now we are blasting a whole handle down, trading at 130.18. So these are in 30 seconds. They still trade the fractions over there in the bond market. Maybe they'll do another oil OPEC cut. That's what I figured too. So, when I saw that number, the $80.90, I think it said on 11 million barrels or something like that. You can't quote me on that part. You can quote me on the 80-90, but I forget what they said about the volume. I thought it was 11 million barrels, and I thought to myself, that doesn't sound right, because I thought they were producing 13 million. So, yeah, I guess, in other words, if they get the same dollars for less barrels, that straightens it out also. I guess that's what makes sense of it. Remember, a million barrels at $80, you're talking about $80 million, almost $81 million. So if they can pull a million barrels off and at the same time get it up, was it 80? Say if they get it up to $80 again, it's still $80 million missing somewhere. That's not a bad number, but then you're talking about on a daily basis. That does get ugly. For a full month, 30 times 8, that's $240 million. In the end, it's you're talking about $3 billion a year, which is not that bad when you really think about it. I mean, that's not the worst thing. I wish the United States was $3 billion in the red, not $31 trillion in the red. That kind of makes sense there. If you have time, how about the Hoggies? Well, I have time. For you, George, and everybody else here, I always have time. You ask for it, you get it. And here we go. Remember, hogs are not trading live at this moment. Hoggaroonies, Hogolas, the Hogsters. As we open up, there you go. There's Augie Hoggies. You must have. The gods knew that you were going to ask for this. The farming gods, the meat gods. And you can see here we're flirting with that weekly sell window problem. And you can see here is the second day in a sell. But this is yesterday. We still have to wait for today. They don't start for another 31 minutes. So we have to wait another 31 minutes for them to start trading. Let's see what they're doing with the grains. What do we feed hogs? We feed them meal. Let's go see what the meal looks like. Do we still have meal in there? There it is. There's meal. May meal. And there is May meal trading live right now down at the lows of 4 months, 5 months, 6 months. What is that? That's last time it was down here was in December. and that is the front month contract. And they've been taking it down, 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 down. We've stopped following this. We had a client that was watching it, but they don't watch it anymore. They shifted over to something else. So there was the sell there. And then it goes into a buy there. And then a sell again, like so. Now, I'm not sure how clean this is. It could be not as clean as we would like. In other words, there might be some bad data in it. But overall, just looking at it nakedly, I guess you could say. Raw. Looking at it raw. You know, it's been in the sell since its peak up at the 460-ish area. The weekly is a lot more trustworthy. You can see that. It's for sure it's in the sell. And it doesn't seem like it wants to come out of it. And they feed that to the little hoggies, and it's been going down. And so the hogs have been going down in price too, you know. Let's take a look at the June contract, the Hogolas, the Hoggaroonies. There's the June contract. And it's done that same thing. It's done that downwardly drift just like the way meal does, because that's what they do. They give them, what's that, the Chicago Crush, right? Oh, God, the Richardsons. God, I haven't seen them. I used to trade with all of them, the cousins and the brothers and uncles and so forth. The Richardsons that created the Chicago Crush. The bean meal, suey bean triple trade strategy. The quadruple pair. Well, not a pair, it's a triple. Let's see. George says, yeah, like to see if December hogs can hold 77. We don't have that hogs in there, but since you mentioned it, let's go look at them. You got me interested. Let's see. Where are they at? Let's go down to here. Oh, let's do this. I'm going to make a copy of that. Activate. Go with a copy of that. And then park it in there like a paste job like that. And let's see what the Hoggy Roos look like. Now, I know that Ducascopy trades the grains. They have soybeans and so forth in there. That's why I showed the meal. And let's put the deck in there now. No deck, so let's add it. Add that HG high grade hogs, is it? Is it not HG? HE, I'm sorry, HE. That's copper, H high grade. Look it up, and we're going to slide the deck in there. I've been kind of, when I look at the feeders, I'm always amazed how high the feeders are compared to the hogs. The hogs have been selling down, and the cattle have been in buys. Let's see, Z like in zebra, right there. Not that one, that one. Here we go. All right, she's been added. Now let's put her in there. Close. There it is. There we are. And you can see there's hogs 77 and change. See that there's a sell there. And then the buy is back one or two, just one right there. And then back into the sell there. And the weekly's been in the sell. Oh, look at this. They pushed it into the buy last week. That's interesting. We went into the buy right there on a daily, then the weekly jumped in, and now it's pressing back down again. So, yeah, hogs holding that 76 area, I guess you could say. It looks like it's a 76 and change right there. And we're just going to label this as deck. DEC. HE. Okay, there it is. So this way, if you look and you want us to look, we will look. And it looks like it's going to go back into that weekly sell. Today's Friday, and it's already there. See that right there? So that short-lived action. Matter of fact, I might as well put the line in there. There we are. There it is. So it's been in a sell all the way back, though. See, this shows all the way back in February. Let's go look at one of the contracts we actually follow more for clients. Let's see, attach. And the August hogs. Oh, the Augie hogs went into a buy also. And they went into the sell in March. Okay. So up in the 105 area. All right, so they went into the sell up around the 105 area and fell all the way down to the 90 area there. So basically the decks have been doing the same thing. Okay, so they went into a buy. Did the front month, June, do that? Let's see. Right there. No, it missed it. So Spot missed it. Couldn't get into the buy. Interesting. Benny and the Jets. Dun, 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 dun. Hey, Ben. What's happening? Let's dance ourselves right over to. No problem, George. Glad to always answer. There it is. Cable Aussie. It's trying to get into a buy today. Didn't get there yesterday. We just missed it by the hair of its chinny chin. Chin right there. Right there. What's up with that? Oh, okay, yes. There is. That's it right there. That's a goofy gap. Doesn't matter. Doesn't hurt it any. But it's trying to get into the buy today. I think we talked about that yesterday, how it was doing the same thing. It was battling. And it was trying. We figured maybe today would be the day. And it's in the weekly buy. So when? That's it. That's it. Now I remember. I wrote when on there. So when it closes like that today, then you can buy it. That's it. Am I bullish on gold? I'm always bullish on gold. Even when it's going down, I'm bullish on gold. Let's take a look at gold. Gold is taking a little smack in the face today. Geez, they almost had it up to the $2,100 area yesterday. There it is right there. You can see the high was like 88 or something like that, 89. What was the high? Yesterday's high was 88.5. So it was 88.5 yesterday right there. And now we're trading at 17. So we're $71 off of a 2-day high. Ouch. And it's playing with the sell just the same way. I think silver's doing the same thing. There's pressure on it. But the weekly looks like it'll hold up fine. So it'll just be another ugly, goofy stuff. Oh, yeah, that was it. Yeah, let's go back to that. There it is. Where's my mouse at? There it is. Right there. So there is, there's the numbers there. It's at the when. It needs to close there. If it closes there, it looks like a buy again. Yep, there's AUD. I'm going to sip my tea as I... okay. I'm glad you're laughing. My mama used to say, it's better to laugh than cry. All right. Let's see. Where are we at here now? From there, we were in the currencies. Let's go dance our way back to the currencies again. And we were looking at the yen. So now from the yen, we go to the... We did the Swiss. Let's look at the Turkish lira. Turkish lira is trying to break back into that sell again, where it looks like it's going to close in the weekly with no problem. Notice the volatility seems to be diminishing more. Not a lot, but a little. Closest where? What do you mean? Let's see. I didn't see it. Oh, you didn't see it? Let's do it again for you. You want to see the GBP? Sure. There it is. How's that? See it better there? Remember when? When you asked yesterday, when? That's when. Right there is when. When it closes above today, that will be the buy. Closes where? Above the zero line here. Or right, right here at 187.43. And more than likely it could. It may. I don't know. I don't try to distort it, But I would say that in this area, 187.20, 187.30, 187. Well, here without a look at the size of that. It is lifting pretty big. That's a good size up. It's a good start, especially with it being minus. I love that. Does that make sense to you? And then from there, we're going to go over and look at Turkish. Oh, I think we did Turkish. We're starting to look at Turkish lira. So, just waiting for Benny to say, "Den, den, 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 den." Benny and the Jets. All right, cool. Yeah, all right, excelente. All right, and you know what? Let's put it up on J4X too, just to take a peek at that. GBPAUD right there, and you can see it there. It's loading. Keep those doggies rolling, rawhide. Get 'em up. Rodeo season starts in another 22 days around here. They're already advertising the big bull riding weekend where it's $40 for 2 days and you can watch the best bull riders in America riding wild bulls. Thank you. I appreciate it. No problem. All right. Now, from there, we go over to the Turkish lira. Euro Turkish lira right there. Put it up over here. Yeah, and like I was saying before, the volatility has diminished, or at least is slowing down. Let's put it that way. But you can see here it's pressing hard on it on the daily. It's like not interested. Went into the buy here, gave us that cute little pop for a win, and then if you're managing your money, you have a stop in there, and if it breaks it, then obviously you take your profits. Ta-da! Now, in this case here, it's breaking down now, but we're in a weekly buy, so you just let it break down until we get into a buy again. From there, we go to the King Peso, the King Mexican Peso, the king of the bricks. It's looking very strong this morning. It's down to something like a 5-year low. Look at that. It's been hovering in that area for a while now. It was only when they had that political announcement about joining the BRICS did it freak it out. So the king of the BRICS is basically showing lots of nice strength, and that means it's gaining against the dollar, whereas we see a lot of products are losing against the dollar this morning. So it kind of flips back and forth. What else can we say? It's still in the weekly sell. There's the zero line right there. So you can see that, it's just kind of hanging. It's been in a weekly sell since up in here. Then it did a little hesitation, but the fast said, nah, don't pay attention to it. And sure enough, it was right. It came back down again, but not a big move down, just a move down. All right, so now where do we go from here? We go over to the two currencies that we always mumble about that act with the commodities markets. The one we've been, has not been disturbed, and that is CAD. So as this goes down, oil must be going up, and that's what we seen earlier when we were looking at the oil contract. Let's go find it again. And there is spot oil right there. You see it's trying to move up. It's at the highs of the day over the $70 area. So the Canadian is doing its job. It's reflecting that action, and it's gaining against the dollar. And you can see the weekly is trying. Look at that. It's right on the edge of getting into a buy. It's a minus 0.00043. Only 5 digits out. That's not too bad. And as I always like to remind people, we wrote this math to deal with the Higgs boson back in the 70s. So it does lots of interesting measurements on lots of different things. Alrighty, from there we'll go to the South African Rand. The Rand is moving up, which makes sense because we see gold down. and you can see the weekly is penetrated. I think it went into the weekly last week, actually, to be exact. Was that? Is that the weekly buy right there? And the answer to that is yes. It went into the weekly buy. Let's grab one of these. Let's put a buy in there. I'm not sure why we didn't have a buy in there. I thought we did. So this is going to finishing off a second week in the buy, which is obviously a bearish sign for gold. Let's see where gold really started the week. Gold. And there is gold. No, that's crude. Where is Mr. and Mrs. Mouse? There it is. And then let's put gold in there. Gold start, if unfortunately the South African Rand does not represent the metals complex as well as it used to. So there is Monday right there. And there's Friday of last week. So gold was trading at $2,000 in the futures contract. Ran up to $88 up. And now it's trading at 18 or 17. You can see it there. And that's let's throw it up on J4X. And that kind of emphasizes the issues that are going on in the metals complex. Where did metals go? Where are you? There it is. Excuse me. So there it is right there. And what else can we say about any of that? Not much more than that. With stats and everything else going on with labor and just the massive confusion in general, there's not much more to be said. That obviously the labor numbers themselves just don't have the value that they used to. That's the problem. They really don't. And so when we look at gold, gold went into a weekly. It's been in a weekly buy for a long while now, since the beginning of March. From the 1800 area, 1850 area, and it gets to 20,088, and it's having its issues. You can see the fast broke underneath last week. It's having real issues there, and it's not letting go. As you can see, the fast right there is underneath the zero line last week and this week, and here we are backing off still. It's trying to warn us. If the slow joins in, it's going to be some pressure there, but I really have a hard time understanding the selling in that complex. It's more of just a constant back and forth noise. That's what it really comes down to. It's just, and the labor numbers are no help. Let's put it that way. In other words, without having solid numbers, not that they were good or bad, they're so small to begin with. In an economy that has 360 million people, if not more, why does 100,000 jobs, they were looking for 188, it comes out 253, but when you dig down inside the labor numbers, it's not very pretty, and you would think that's why gold should be up, not down. Basically, that's not the point. I mean, it's not happening. Instead they said, gold goes down a lot of times because they think interest rates are rising. Well, the currency pairs are telling you the same thing right now. They're pushing a lot of the currency pairs down against the dollar because they think interest rates are rising. And why do they think that? Because the 30-year Treasury bond is rising. It's gone from 131.30 high, and it's trading at 130.18 as we speak. So yeah, interest rates are rising at the moment. Is it super duper? No, but there's a war going on with the bond traders versus the stock traders versus the economy in general. It is definitely all over the place. More people left the workforce. That's what scared people. Yeah. So the unemployment rate went down because more people left the workforce. See, that's the problem, is they've changed the numbers, so it makes no sense. So in other words, 3.4 is not really helping us any. I'm hearing more talk now. There we go. All right. What else can we say about any of this at this point? Just that, as the labor force shrinks, I guess that means interest rates are rising. I don't know. I don't get it, but that's what it is. All right. Let's look through the other metals. I imagine copper. We saw copper yesterday, and it's still in a sell compared to all the others. But let's just see what copper's doing. That's like an industrial metal. And it does. It kind of stares at China, but still, it's an industrial metal. And let's put it up on the screen here. In fact, let me do this too. Save image. Yes. And I'm going to save that. There we are. And then there's copper. You see, copper's lifting up a little bit, but still in the weakness there. Now, it's very hard to believe that industrial metals with something like that coming out is going to do that, but it does. And then you slide over to silver, and you can see the silver, still in the buy, but getting beat up. And so, again, it's a real sloppy action. And since the labor force is shrinking, labor force shrinks. I guess that's the best way to look at it. And that's pretty much what it comes down to. And so the unemployment number should rise, but it doesn't because of the way they've rigged the whole system. So it makes it even worse. And let's see what platinum's doing. Platinum is trying to put a bottom in. Looks like at the end of the day yesterday. Is that right? Let's format that, redo that, because I don't remember it trying to be in the buy yesterday. All I remember is it being in a sell. So let's change the setting in that. Maybe it'll straighten out. Let's try the default one instead. Yeah, there you go. Okay, so they in the end they tried to put it into the buy. And let me just take a look at yesterday's chart that we sent out, because that seems to be a little bit odd to me. Yeah, see, there was a big drop there yesterday, and that's not reflecting that today. I don't see that at all. That's there. That's today. That drop should be much lower. So that's all wrong there. So we'll have to fix that. So, and I think that's the way to really look at it too. The labor force shrank, and then the unemployment number dropped. So it's not the number. It's again, basically, I don't know how else to say it. I know what I'm saying, and I'm disappointed. I think that's what it comes down to, is that we have an index that doesn't represent what's going on. So labor force shrank, and our unemployment rate dropped at the same time. So in other words, that's what I said. During the Obama years, they changed the labor statistic, the Bureau of Labor Statistics, so that when the labor force shrinks, it doesn't. It's not part of the calculation of following unemployment. Beats the daylights out of me how you could do that to begin with. In other words, that doesn't make any sense to me whatsoever. But that is what it is, and that's the way they do it, and no one's trying to fix it at the moment. And so as long as they're not trying to fix it, we're going to have to put up with junk numbers. And I think the stock market's still, towards the highs of the day too. We're seeing strength in that, and so that's not, not that bad at all. So let's see. Go like that. There we are. There we are. And so when we go like this, maybe that'll straighten it out now. Let's go back to the default. There we are. That's better. Okay. Now I want to raise the minimum wage at the same time. Okay, go for it. That's all they talk about, is doing things like that. So, what do we got going on from there? I think I've gotten my point out. The labor numbers don't make sense anymore. We've been saying that for years here, but today is a perfect example. Labor force dropped. There we are. That's my title to it. I'm sending it out already. Labor force dropped. I mean, that's what it really comes down to. Benny says gold just hit 2004. Did it really? We have. Let's put it up on J4X, because that would be they're watching the spot. Yeah, there's 206, and I got the futures contract. Let's see where the futures are trading at, and it's got a couple months of value in it. That's the June contract. Yeah, 213. So yeah, there's pressure. Now either way, you're right. So look at the stocks. They're taking the stocks up. No, did they break the 13? Yeah, they went to 14 now. So now they'll battle with that for a little bit. So that is what it is, traders. We're going to be getting out of here. I got other things to march. That's why I started early today. I was really disappointed with the labor numbers, of course. And it's not the numbers itself, the 3.4 or the 253. I'm disappointed that the labor force dropped. And so the measurement should be that employment is rising, but it's not. I mean, imagine if you have $100 in your pocket and I take $20 out of your pocket and you tell me, well, yes, I have the same money I have equity in my pocket. That's what it's basically done. And it's not measuring how much equity ever, just that you have equity in your pocket. Is it a bullish or bearish? What's that? The gold? Let's put it in there. Gold has dropped underneath the sell. The weekly's holding up, but by not very well, because the fast went into the sell last week. Maybe they're going to back it off. I don't know. It's possible. I would think it's possible. They may back it off. It's a good possibility that they do that. But how far down can they really take it? 1950? You know what I mean? Are they really going to go challenge the 1850s again with all that's going on? You know what I mean? It's if we go into a weekly sell, yeah, maybe, would they really bring it back to the 1850? Good possibility. I mean, look, I think interest rates are going to go down, not up. So it should be that should be an underlining pressure on it to begin with. Does that answer your question? All righty, traders. I guess we are done for the day. Oh, I'm going to check one more thing. Natural gas in Spain. Natural gas in Spain is trading at, because ours is almost touching $2 now. A cubic foot. There it is right there. Back up over 28. Wow. And then here, check this out. Here is natural gas in the States. It was flirting with the... it was down as low as $2.03. $2.03. It's jumped back up to almost $2.12. So, yeah, that's a lot of noise going on when it comes to the whole process at this point. It is really, we have a lot of, it's amazing. If it wasn't for the Fed being able to hold the markets up, keeping them firm through quantitative easing, the markets would be much lower. They definitely are overpriced, but it doesn't really matter since they're holding them up and there's nothing stopping them from doing that. There's no way of stopping them. So, all right, traders, we're out of here. Everybody have a safe and smart weekend. And this is Doc from North America saying, happy trails to you until we meet again, which will be Monday on TGIM. Thank goodness it's Monday. Happy trails to you, to all our trading friends. Later, traders. Konnichiwa.